Welcome to week number 42 of How to Trade the Forex calendar. 10 more weeks to go, a stretch until we finish this year. Starting off this week's analysis with the CFTC report covered by the Scotiabank, we can see there was some incredible long positioning build up in the euro, also shorts added. Now the thing is, the euro longs added at a cheaper price, while the the euro shorts or dollar longs added at a more expensive price. So there is the feel that they are in the middle of a possible dollar long squeeze here, and that could possibly drive Euro USD one or two handles higher in the coming weeks, but the overall trend should be firmly lower. More or less, we saw the same thing in pound. Last week we saw a bit of a build up in long positioning. Short positions covered quite a bit, but open interest still looking quite healthy. Moving on to the charts, having a look at USD South African Rand. That's a chart I covered last week where we were looking for a short in that. It did some magnificent move lower, about 2,000 pips, near to over 2% move in 1 week. Was really quite stellar, particularly in a sort of congested environment where nobody was really expecting it. So I'm expecting more downside from that pair. I'm wanting a quick explanation of what is happening with yen pairs, because a lot of the yen pairs did some really strong rallies last couple of weeks. And just a quick explanation, why is that happening? So what you can see here is the inflation expectation denominator, or basically on market inflation expectation. There's one that's consumer based. This one is market inflation expectations, 5-year forward rates. It is pushing higher, and if I were to, for instance, compare that with AUDJPy, you can see that these swings are really, the pair really moves really closely with inflation expectation overall. That's the main reason really why AUDJPy and all the other yen pairs starting to push aggressively higher, is because that inflation expectation pushed higher too, on the back of supply bottlenecks, commodities rising, wages are rising, and nobody's expecting this whole inflationary input to stop until halfway through next year. So you can see, definitely based on that, we have a macro driver here pushing it. It's not just positioning, liquidity kicking about. Looking at AUDJPy, I'm looking for another about 100, not 100, but maybe about 80 pips higher next week, specifically as we go into the RBA meeting. Next week we have the RBA meeting on, I believe it is Tuesday, was it? Let's double check. It is on the wrong week here. Right, it is on the Tuesday for me, United States. It will be probably in the afternoon on the Monday. Now the RBA may is not expecting anything new, but if you recall last time, Government Love told us that the RBA is keenly watching the hourly works component of the unemployment from Australia, and last week the hours worked per week did increase indeed, and I'm looking for some upside in AUD on the back of that. However, long term, we're not expecting RBA to make any moves until well past 2023 into 2024. Still, the dynamic is there to be a bit positive about AUDJPy. Plus, we have that inflation expectation rising, hitting a significant level. I'm still thinking it's going to push higher. Therefore, I'm expecting AUDJPy to launch another about 80 pips attack a bit higher. Next pair you want to have a look at is GBP. And look at GBP/USD now. We have probably look at EURGBP, what happened there. So GBP/USD made quite a strong move over the past few weeks as well. That's really on the back of, again, so we had a lot of positioning here going short, then they're on wound. Some new longs came in, and a lot of the guys that are short, a lot of the speculators, I should say, they are short GBP/USD, are really badly positioned for a squeeze, and I feel that squeeze will likely play out in the coming weeks. I should mention though that CPI is really important next week. CPI on Wednesday for the UK. It's continuously been pushing higher. So if I look at the yearly rate, continues seeing more aggressive levels, and that is prompting the Bank of England to raise rates. On the back of this read, I'm expecting pound to create some bullishness in GBP/USD, but also in EURGBP. That's one of the pairs I've been tracking short since January this year, going back all the way to around these levels. And the dynamic and the macro picture and the drivers for this to go lower have not changed. They only got stronger. So you can continuously expect EURGBP to find lower levels as the Bank of England is expected to raise rates, while the ECB is basically doing nothing for a very long time. That's the sort of pairs I'm looking at going to the next week. And you find that right now there's this dynamic, and it's a really rare one because we haven't seen it. Most of you have been trading for less than a decade, probably haven't seen it, that there's some real inflation hitting the economies. So a lot of the countries which are producers of commodities will find that their currencies appreciate just on the basis that inflation is there. So one of those currencies has lately been AUD. So if you look at AUDJPy, one of the explanations for you seeing this pushing higher lately is because of that dynamic. Another one of those was NZD/USD lately. It's been pushing up. Yes, the Reserve Bank of New Zealand did raise rates, but really the key mover here was that inflation is going higher as a commodity producing country, and they find those inflows. Actually, you find that was more aggressive in Euro NZD, and I kept beating the drum about shorting this one for such a long time, and it's finally finding several hundred pips lower levels, close to 700 pips drop from the yearly open when we earlier pointed it out. And that's just the dynamic. I just want you to understand why is it moving so aggressively. It is because of that. Same thing with NZD/JPY. Traders tend to use like cheaper currencies like the euro, the yen as funding currencies to buy commodity currencies to express that sort of like that view. And as long as the whole idea of that inflation pushing higher is there, it's hard to imagine why these should come down. However, global growth is slowing down, so all of that won't be able to rally unabated for too long. Keep an eye on those. Again, quickly going through the charts, we're looking at next week. AUDJPy expecting a wee bit higher. GBP/USD and EURGBP should see some movement on Wednesday on the CPI read. And that's that would be mostly a wrap for next week. I've been very keen to play day by day and news by news aware next week, as we are heading into the end of the month. End of the month, a lot of things tend to decouple, and things starting to get much more obvious, and you tend to see stronger moves starting November. Talking actually of November, and that's the last thing I'm going to cover before I go. When I look at gold, I'm really keen on shorting it because of the Fed Funds futures dropping and interest rates rising, or interest rates expectations I should say are rising. I would expect gold to take out these lower levels, but I won't be probably shorting until November, when the whole thing starts kicking in with the tapering. We have a proper timeline and we know what we're doing with that, and that's when I start looking to short. So now until the end of November, on the end of October, expect market to decouple a little bit, moves not to be as obvious as they were earlier in the month. Once November rolls on again, you can expect a lot of the moves recouple, strong movements, and some more aggressive trading as well. This is all I wanted to cover. Thank you very much for your time. I'm wishing you all a profitable week. Keep risk in check, because there's so many more moves coming into the coming month, and also as we move into next year, trends are really starting to expand again. For a very long time we didn't have this in the FX market, and you want to make sure you have enough margin to be able to trade these larger moves as well. And don't exhaust yourself too much on these little small noisy moves that don't end up too much in your account. That's all I wanted to say, and I'll catch you all next week.